Are your savings stagnant no matter how hard you work? Make money work for you with MIDF Invest, an easier, safer way to grow your wealth by investing in stocks and ETFs from over 6,000 US companies. The bank is regulated by Securities Commission for your peace of mind, so you can keep your money safe while keeping it busy.
Hi, let me show you how easy it is to buy a stock from the MIDF Invest app. To start, download the MIDF app from the Play Store or the App Store. Registering your account with us will be very easy, and once your account is approved, you can click the trade button to begin your investment journey. Search for the stock that you like to buy, customize your stock buying options, tap on the Place Order button, and finally tap the Confirm button. And congratulations, you have purchased your first stock on the MIDF Invest app.
Want to earn from some of the world's biggest companies? Let your money work abroad. With MIDF Invest, you can invest in stocks and ETFs from over 6,000 US companies, including a wide range of Sharia-compliant stocks. Have questions? You can talk to our experienced happiness agents anytime. So, if your savings are still sleeping on the job, it's time to make them work a little harder.
Hi guys, I'd like to wish everyone a warm welcome to the webinar today. Today's webinar, it's going to focus a little bit about how to invest as a beginner within the stock market, right? A lot of the requests actually came about when there were people asking a little bit on how to invest, right? So we wanted to make sure that we I guess not only cover things like the tech sector and also the oil and gas sector, but also we want to go back to the fundamentals, right? I think it's nothing more frustrating than wanting to invest, right? And you hear all these amazing ideas, but we just don't know how to take the first step, right? So don't worry, guys. If you guys are wondering, how do we even begin? How do I even start the first step? How do I even start my investment journey, right? Today's webinar is the webinar that will help you guys, right? So a little bit about me. This is myself. My name is Adnan, and I have been within the financial industry for close to 20 years, right? And I think what is not said over here is while I worked in the investment industry for many, many years, right, I actually managed to retire maybe 1 or 2 years after accumulating some wealth, I guess. And this is via investing. And I can share with you some of my experience on how I actually managed to build a strong enough portfolio to eventually retire for a while, right? So I'm going to share some of my experience with you guys, right? So before we start the webinar, allow me to talk a little bit about the this MIDF app that we have, right? Again, I just would like to say that we have an amazing app or on the web browser, right? And if you were to, I guess, type on www.midfinvest.my, this will enable you to actually look at the web app, right? And this web app is a bigger version from the normal mobile app, right? And also the web app actually has more features and functions. So do give it a visit. And from there, play around with the web app, right? So anyway, as I was saying, right, today our topics of discussions are as follows, right? We're going to talk a little bit about investing for a very beginner, right? We're going to go through, and study about concepts on compounding interest, how we can use compounding interest to build wealth. And on top of that, I want to talk about the step-by-step on how to start investing, right? And I can even share with you some of my personal stories on how I started my investment journey, right? And I think what's important over here is that since this is a webinar, right? If you have any questions, please do ask, right? I'm here to help, right? And I'm here to actually help answer questions. And the best thing about webinars is you can actually talk to myself if you have any questions, right? And you can stop me as opposed to recording. You know, the worst thing about recording is if you don't understand what the speaker is saying, right? Since it's recorded, it's very difficult for you to actually capture what the guy is saying, right? And sometimes if there's certain concepts we don't understand, right, we cannot interact with the speaker. So the benefit of a webinar is that you can straight away talk to me, right? And the second thing is that I'm going to make it very interactive. This week, we're going to have a couple of questions, and I hope everyone answers the question, right? If you guys want, right? And just out of curiosity, right? Maybe type 1 if you guys can hear me, or type 2 if you guys can't hear me. Well, I would assume that everyone could hear me in type 1 lah, but if you guys can't hear, then a bit susah lah, right? So anyway, let us start, right? Let us start, right? I think when I first started investing, right, in my investment journey, I still remembered, right? Back then, I still remembered a lot of us, right? Me and my friends, fresh grads, you know, many actually wanted to build wealth, right? And at a point in time, we had our first jobs, right? And we wanted to start investing. But the whole thing of it all is that I realized that amongst all my friends, right, the ones that actually took action and started investing are the ones which actually have strong reasons lah, or they have a strong motivation to start investing. And to be very honest, even myself, right, how I started investing was that I still remembered working, right, and I told myself, like, you know, I do want to retire, right, and I told myself very early on in my working career, I said, you know what, I want to actually build a small little pension fund for myself, right? And I had that goal, and I worked very hard, right, towards that goal, right? So right now, if any of you guys are stuck with regards to wanting to invest, right, and every time when you want to invest, there's always that something that comes up. Maybe there's lack of money, or maybe the system is too difficult, or maybe, you know, this week it's just too difficult, right? Just maybe figure out the reason, or figure out your strong whys as to why you want to invest, right? I think the best analogy I can give over here is that, you know, right now we live in an information age, right? Where there's a lot of information on the internet, where, you know, they have information on how to be thin and how to be rich. But the whole thing of it all, my question is, why isn't there that many rich thin millionaires? Basically, the information has always been there. But in order for us to take action, we need to have a strong motivation. And in order for us to have a strong motivation, we need to have strong reasons, right? So I want to start this webinar with this in mind, right? I want to talk a little bit about what's happening in our economy today and why investing is very, very, very important, right? So the first thing is that, number one, there is a lack of jobs within the economy, basically. And I think this can be seen where more and more people, especially there's been this article about a group of young SPM leavers, you know, when they were asked whether they wanted to continue their education, many thought that it was, I guess, not too, it does not pay off that well, right? The whole thing of it all is after they go to university, right, they feel that they do not have any job opportunities, right? And truth be told, a lot of people say in their 20s, right, after they I guess they finish their SPM, can't get jobs, or after they finish their university, they end up, I guess, being in the gig economy, right? So that's the first thing, right? So in this will by investing, this will help make our money work for us. And when our money works for us, this will enable us to get a small little boost in terms of our earnings, right? Second thing is that there is a lack of job security, right? I guess the picture over here, it says there about 4 million Malaysians are likely to lose their jobs with the revolution, the AI revolution, right? And even right now, we could see that traditional jobs like maybe McDonald's, right, for instance, or if you go to maybe the fast food restaurants, right now we can see more and more when we want to order, right, we use a machine, right? Eventually, what will happen is that the people in the front counter will probably disappear. And once machines get a bit better, smarter, cheaper, and faster, even the machine can actually even do our cooking. It's not impossible, right? So that's the second thing, right? So lack of job security. The third thing is this over here, right? About roti canai, right? So again, does anyone remember a time when roti canai was about 1 ringgit, right? Just press 1 and press 1 if you guys remember a time when roti canai was 1 ringgit, right? So I actually went to talk to a couple of people over in Penang, right? And they told me maybe about 5-10 years ago, it was still possible to find roti canai below 1 ringgit, right? Having said that, right now, roti canai prices between 150 to 180, right? So we can see that actually roti canai has increased quite significantly in terms of their price, right? And this increase in price, in other words, is an inflation in food prices. And there was an estimate that roti canai price rose between 10 to 20%. 10 to 20%. So if we do not invest, what's going to happen is that with inflation happening, right? And if we keep our money uninvested, right? Eventually that money that we keep uninvested will lose value, right? So as inflation kicks in, and if inflation is 10% every year, right? And say if we have maybe 10,000 in the bank and we do not invest that money at all, that 10,000, maybe in 10 or 20 years time down the road, today it probably can get us maybe 10,000 ringgit, maybe can get us like 2 supercomputers basically, right? But in 10 or 20 years down the road, right, that money would depreciate in value. And what we can get is even less and less and less, right? So this, a lot of people call inflation, I guess, the silent thief, right? Where eventually, in a couple of years' time, the value of the money will drop. So out of curiosity, right, over here, I would like to ask the audience, right? So pop quiz, do write it down in the comment section, right? What is the one thing that many Malaysians consume, is considered a staple, and some family consumes it, sometimes once a day and sometimes 3 times a day, but is seeing an increase in prices, right? Okay, so the answer for this is beras or nasi, right? Or rice basically. Right now, we can see that there is many reports which actually said that with the changing weather patterns, right? And also there was massive floods in Malaysia earlier this year, right? Prices of beras will increase or might increase, right? And if we were to look at the newspapers, right, we can see that there are a lot of pemborong which say that they are looking towards increasing food prices. So guys, just imagine this scenario, right? Our salary on a monthly basis, it's quite relatively stagnant, right? But inflation is just moving up so rapidly, right? Imagine if our salary does not catch up with inflation. What this basically means is that if we do nothing, we will eventually get poorer, if you think about it. If salary is relatively stagnant, but if there is an increase in inflation in all food prices, right? What we can save, say assuming right now we used to save about 200 or 300 ringgit. Eventually, with increase in food prices, right? We need to makan kan. So with increase on food prices, our savings will reduce. And this will basically mean that we are getting poorer if we are not thrifty, we are not smart, and we are not, I guess, financially savvy with our money, right? And that's one of the reasons why we're having this webinar. And I think the other reason on why investing is very, very important is this, right? So over here, I put up, I guess, newspaper clipping lah, as to what the government is looking towards lah, right? And one of it is actually looking towards I guess before this, once we reach at the age of 55, we could actually withdraw the EPF lump sum, right? But right now the government is actually studying as to making EPF withdrawal a monthly thing. So instead of withdrawing one off, we withdraw small increments every monthly basis, right? So if we are looking towards that one-off lump sum, right, so that we can pay all our borrowings and whatnot, right now it's going to be monthly. So therefore, there could be a shortfall in cash flow, right, upon retirement. So basically, I guess what I'm trying to say is, I think investing could be one of the ways where we can actually solve some of this problem, if not all, right? By investing, this will help us accumulate our wealth, right, as it grows over time. And on top of that, by investing, this will help our wealth, protect our wealth against inflation. And what do I mean by this? Assuming right now, if we invested in a stock and the stock gives us a return of maybe 10%, right? But inflation is about 4%, right? So our returns on our assets is much higher when compared to inflation. And if we are savvy enough with our money, every year where our returns are much higher compared to the inflation, this is where we are building wealth. Our wealth is not only protected against inflation, but is also growing at the same time. So investing is very important. So I think over here, I think these are very popular asset classes over in Malaysia, right? So I think one of them is maybe ASB, right? ASB returns between the 4.5 to 5%, right? I think quite recently, I think it's about 4.5-ish, I think. And then there's also the EPF, right? Also returns between 5 to 6%, right? So my question right here for everyone, if we are looking at food prices, right? And if, like I said, 10 years ago, with 50 ringgit, we can buy maybe a full bag of groceries. Today, with 50 ringgit, can we even buy half a bag of groceries? That is actually the impact of inflation, where slowly the inflation is reducing our buying power. And if inflation is about 10 to 20% versus returns of about 5%, as I mentioned, we are getting poorer, even though we are investing. So what is the solution for this? As I mentioned quite earlier, is to make sure that our returns is much higher than inflation rates. So over here, we have this particular thing. I think this is a very, very important chart, right? Which basically says compounding interest, right? When we talk about investing, compounding interest is a very key concept. And the analogy or I guess the example I'd like to give over here is this. Assuming if we put 100 ringgit in an investment, that gives about 10%, right? Towards the end of the year, we take 100 ringgit, multiply by 10%, we will get 110 ringgit. The second year, we will take the 110 ringgit and multiply by 10%. Right now, instead of getting 10 ringgit, which we got in the first year, right now we got 11 ringgit, which is 1 ringgit extra. Imagine if this were to compound. So that means you're earning interest on interest. And this is the power of compounding interest, where every time you will earn interest upon interest upon interest upon interest. And that's one of the reasons why, if you were to look at returns, right, if you invest, it looks like a hockey stick. It'll be very flat in the beginning, and then after that, it flies up. I'm going to show you a couple of examples in the next slides, right? So over here, we can see examples, right? These are some investors which decides to invest. And what I'm going to do right now is I'm going to show you a compounding calculator, right? So I think over here, I'm going to give you a quick example, right, on how powerful investing is, right? And I think over here also, I'm going to talk a little bit about how does one even start investing, right? So I think over here, there's this very popular budgeting tip, right? Which is the 50, 30, 20, right? Which is the 50, 30, 20, right? So basically what this budgeting tip actually talks about is that every time when we get a salary, right? In this example is Abu, right? 50% will be allocated to our needs, 30% is to be allocated for our wants, and 20% is to be allocated for our savings and investing, right? So right now, assuming if we are making, again, like say like Abu, right, 5,000 ringgit, right? So this will help us bucket our money, right? And when we bucket our money, this will enable us to start a little savings and also an investing account, right? But to be very honest, I do not like the 50, 30, 20, even though it's extremely popular and it's written, in almost many internet literature, right? I honestly working in the financial industry, and me honestly as an individual, right? Right now, I guess there's a lot of inflation around me, let's be very honest, right? Living in KL, sometimes meal could cost maybe 20 ringgit, 30 ringgit, 40 ringgit, right? For one meal, right? And even the transport, sometimes, today when I was taking a taxi in Kuala Lumpur, right? Grab sometimes when it starts raining, right? The fees will be quite significantly higher. And on top of that, if you are going back and forth during rush hour, right? It adds up, right? So basically, and on top of that, some may have family, and also to bear in mind, if some of us have maybe wife, 2 kids, right? Every time when we have a meal, right, it's multiplied by 4, right? So and on top of that, what a lot of budgeting books don't talk about, which I will bring up, is also taking care of older ones like parents, grandparents. So sometimes saving seems impossible, right? And sometimes when I'm reading about this 50, 30, 20, right, I just switch off, because it seems 20% seems very impossible for me. So right now, what I have been doing, and it has been working, right? And as I mentioned to some of you guys, I managed to build myself some wealth and retire, right? So this is what I started my investment, my savings, right? This is how I started saving, right? Instead of focusing on saving 20%, right? This is one way which we can do, right? So right now, let us assume this particular person, right? His name is Ali, and he's about 28 years old. Let us assume he earns about 7K, right? Again, this is hypothetical, right? So I think one of the best ways to start investing or to start saving is to start slow and simple, right? So over here, we look at the habits where Ali has, and assuming he likes to drink coffee and also eat muffin in the morning, right? He likes to have gourmet coffee, right? So let us assume Ali actually came in this webinar, right? And he's like, oh, wow, investing is really cool. Maybe I want to start investing myself, right? And he says, you know what? Let me start from today onwards. And if any of you guys are looking towards starting to invest, right? Start small and start simple. Look at maybe one expense that you maybe can cut from your life. And maybe you can use that money and allocate that money towards saving and investing. I know coffee could be a very touchy subject, right? So, just look at certain things that maybe we feel that, say, oh, we don't really need this, so therefore I can cut this. So anyway, back to this example, right? Say Ali, right? He drinks coffee and have a muffin. And with that, he saves about 20 ringgit by not going to a coffee shop. Instead, he goes to the office, he bancho himself some kopi basically, right? He buys Nescafe, or better still, maybe in the office they have packets of Nescafe, he bancho, right? So in a day, he saves about 20 ringgit. And in a month, right, he saves about 600 ringgit. So 20 ringgit multiplied by 30 days, right? So over here, we can see there's this particular calculator, right? So we can see that the total contribution is a flat line, right? Flat line. And I did this for only 10 years. And what will happen in 10 years if he just stops drinking coffee and stop eating muffin, right? The total amount saved is close to 110,000 ringgit. Let me repeat this again. By just changing one of his habits of not drinking coffee, of not consuming maybe muffins, he saves about 20 ringgit. And by him saving about 20 ringgit, he invests that money, and that investment actually gives him about 10%. In 10 years, he will get 110,000 ringgit, right? So that's the power of compounding interest. So let's get to very, very basics, right? Right now, we talked a little bit about how to invest, right? And the next thing, and before that, we talk about why investing is important. And I talked a little bit about, the reasons, job security, inflation, so on and so forth. Right now, let's talk about asset classes, right? So one of the most common asset classes, right, is stocks. And what stocks are is basically a share in the company. And if you were to buy a stock, you will be a shareholder or you will be an owner for that company, right? And how you will make income is by selling the share at a higher price. So the concept is buying low and selling high. This is where you can get capital gains, right? And how stock prices goes up is when a business does well, right? So again, the example over here, I'm going to give it in a later slide, right? Is this. Right now, if we decide to invest in an amazing smartphone maker, right? And over here, these are the numbers for iPhone sales, right? During 07, not so high, but if you look at during 2011, 12, 13, you will see a spike and then it drops down. You see a spike and it drops down. One of the reasons why is every time when a new iPhone is launched, we will see a spike in terms of sales and then drops down a little bit. You see another spike and then it drops down a little bit, right? And as I mentioned in the previous webinar, Apple stock price, right, were a couple of cents, maybe 10 or 20 cents, right? And right now it's about $100, right? And it's 1,000 times, right? So the analogy I like to give over here is instead of buying an iPhone, let's say you were savvy enough, and the iPhone costs about 5,000 ringgit. You take that 5,000 ringgit and you invest in an Apple stock, right? If you went in as an early investor, as I mentioned, your money would have 1,000 times, 1,000 times. That 5,000 ringgit today would become 5 million ringgit. So let that point just sink in, right? That's how amazing investing is, right? So another thing that we want to say is, with investing, right, you will also get protection. And MIDF Invest is actually regulated, basically, right? And we have the SC and also Bank Negara overlooking our overall operations. So, not only you have the upside of a stock, but you also have the security of knowing that your investments are safe, right? So I think another thing which I like to talk about is ETFs, right? And the good thing about ETFs is that ETFs is like a basket of stocks, right? So you can get maybe stock A, stock B, stock C. And the good thing about ETFs is that it will give you diversification. So over here, what I mean by this is, assuming if you bought stock A and stock A would reduce by 30%, right? So, and if you bought only one stock, basically your overall portfolio will drop by 30%, right? And what's worse, if the stock dropped by 70% and you put all your life savings in that particular stock, it is quite dangerous, basically. So by diversifying, right, say assuming stock A dropped by 70%, but stock B maybe rose by 50%, and stock C rose by maybe 30%, right? That will help cushion the drop in stocks. And sometimes, if the overall portfolio actually or increase in value, right, even though stock A turun, right, but your overall investments may increase in value. So that's the advantage of having an ETF. So right now, I'm going to just end it over here and just say, right, last week, I talked a little bit about the NASDAQ ETF, which is QQQ. Over here, we can see that this ETF actually gave 104% in 5 years, which is a simple, if you take a simple calculation, it's about 20%, right? So, and if you take 20%, right, and invested at 20%, say Ali invested at 20%, and he maybe saves about 20 ringgit per day, his investment today is almost 200,000 now. I think it's about 180,000 just by investing in ETFs in 10 years. So I ask you this question: if you can only save 10 or 20 ringgit, and if you can invest in a relatively safe, diversified asset, maybe this is one strategy you may want to consider, right? Right. So one of my colleagues actually gave a survey for this webinar. Please do answer it, right? If you guys have any time, right? But be that as it may, I am open for any questions. If there is, I'll just hang out here for maybe 1 or 2 minutes. If there's no questions, I guess we'll end it from we'll end this week's webinar then. All right, so I don't see any questions. Thank you so very much for joining this webinar. I hope to see you guys in the next episode. And the next episode, we're going to talk a little bit more deeper towards the topic of how to invest as a beginner investor. If there's only one lesson that you can take from over here, is this: if you have good habits, you'll get good results. And if you were to compound good habits, you can see the returns as per this particular slide, just by 20 ringgit per day. So it's a food for thought, basically. With that, guys, take care, and I hope to see you guys in the next episode. Take care.